They say buying a home is probably the biggest purchase you're going to make in your entire life. So it's very important the type of mortgage that you get. Many of us have done that, and now we're in the market for switching mortgages. But how can I be sure I'm getting a good deal? There's a lot of confusion in the marketplace at the moment. I'm here today to talk with Anya Carroll of CCPC about whether I'm eligible to switch mortgages and whether it's the right thing for me.
I suppose the first thing is whether you're eligible to switch.
So Anya, how do I know if I can switch my mortgage?
Well, do you have a fixed rate mortgage?
No.
No, okay. And do you have a tracker mortgage?
No.
Okay, so yeah, that probably you're on a standard variable rate then. So you could switch at any stage. If you were on a fixed rate, you'd have to wait until the end of the fixed term to switch, or if you switched during the fixed term, you might have to pay a breakage fee. And if you're on a tracker, generally it wouldn't make sense for you to switch because tracker rates would generally be the lowest in the markets.
Before I start, how much hassle is it going to be for me if I want to switch mortgages?
Well, if you remember back to when you took your mortgage out in the first place, you're really going to go through the same process again in terms of making an application. But the difference is you're not buying a house, but you are looking at getting a new mortgage. So you have to go through the same application process. So it does take time. The same paperwork needs to be submitted in terms of applying. But I think the fundamental thing is it really can be worth it because you could save thousands or even tens of thousands of euro over the remaining term of your mortgage.
The marketplace has changed quite a lot since I took my mortgage out a few years ago. Are there any pitfalls I need to be aware of before I get into this process?
Well, you can actually use our website, ccpc.ie. So these are comparisons and they're updated every working day. So if a bank changes their mortgage rate or if they put a new product onto the market, all of the information is here. And what you can do is you can have a look by putting in your information about your current mortgage. So the value of your house, the amount of mortgage that you still owe, the term that's remaining, and your monthly repayments. And this shows you exactly what's available on the market, both in terms of variable rate mortgages and fixed rate mortgages, and you can see how much you could actually save. So you can look just at variable rate mortgages, or you can see here there are all the different fixed rate options, or what I'm showing you here is everything. So all of the different mortgages available on the market, and we've sorted them by the rate, so you can see that the lowest rate available on the market is 2.9%, which is a 1-year fixed and would save you €242 per month in comparison to what you're currently paying now.
And Anya, what if my credit history is less than perfect? Maybe in the recession I fell into arrears on my mortgages or my mortgage repayments, but now I'm back on top of everything. How might that affect my ability to be able to switch mortgage?
It's like anything really, Hugo. Like when you apply for a mortgage, the lender is going to assess your capacity to repay that mortgage and they'll look at your credit history, certainly. And that's the same when you apply for any type of a loan, even if you apply for a credit card or for an overdraft, the lender will go and have a look at your credit history. What they'll want to see fundamentally is that you have the ability to make your repayments. But even if you have had problems in the past and you're now on top of your mortgage again, there's nothing to stop you approaching lenders and making an application.
So if I do find that I can get a better deal with another mortgage provider, can I then take that back to my current mortgage provider and use that as leverage?
You can, and absolutely. I think a good first step if you are thinking about switching your mortgage is actually to contact your own lender first. Talk to them about the rate that you're on and see if they're willing to offer you a better rate. And then, once you've done some comparisons, certainly again, go back to them and let them know that, you're thinking about switching. They may be able to maneuver a little bit on the rate. There's no reward for loyalty. And if you can, save this kind of money, as I said, potentially tens of thousands of euro over the remaining term of your mortgage, it's really worthwhile in just even having a look to see what's available.
Should I use a financial advisor in this process?
A lot of people might use a broker when they're getting their first mortgage. I don't know, did you use a broker for your first mortgage? Yeah. And what that does is, it takes some of the work out of the process for you. But you still have to gather all your bank statements. You still have to complete application forms. It just means that mortgage broker or intermediary will actually talk to the bank on your behalf. So that really comes down to a personal decision. Like, how much time do you have to put into this process? Would you prefer to have a broker doing all of these comparisons for you? Or are you happy to do the work yourself?
So what are the next steps?
So first thing you should do is to check if you're eligible to switch. Second thing you should do is have a look and compare your mortgage with what else is available on the market. Certainly talk to your lender to see if they're willing to move on your rate as it currently stands, and then start making applications to different lenders, and then you can finally make the decision about whether you want to switch or not.